Welcome aspiring traders to a journey that unlocks the doors to the dynamic world of forex trading. In a landscape where financial markets pulse with energy 24/7 and fortunes are forged with the click of a button, you have entered the gateway to potentially life-changing opportunities. In this comprehensive guide, we are not just going to scratch the surface, we are diving deep into the intricacies of forex trading in 2024. Whether you are a curious novice or a seasoned investor seeking refinement, this video is your compass through the maze of currency markets. Picture this: the thrill of predicting market movements, the satisfaction of well-executed trades, and the wisdom gained from every success and setback. But hold on, success in Forex is not a gamble, it's a calculated pursuit. Today, we are handing you the keys to a disciplined, informed, and strategic approach. From understanding the very essence of forex trading to navigating the nuances of risk management, we have crafted a guide that transcends mere instructions. It's an immersive experience, a roadmap to financial empowerment, and a passport to a realm where opportunities meets preparation. So buckle up for a ride where theory meets practice, where analysis meets intuition, and where every candlestick tells a story. This is not just another guide, it's your ticket to the exciting world of forex trading. Stick around and let's embark on this enlightening journey together. Welcome to the art and science of forex trading in 2024. Introduction to Forex. Forex, short form for foreign exchange, is the global marketplace where currencies are bought and sold. It stands as the largest and most liquid financial market in the world, operating 24 hours a day, 5 days a week. Unlike traditional stock markets, Forex does not have a centralized exchange. Instead, it functions as an over-the-counter market with trading occurring directly between participants. What is Forex trading? Forex trading, simply put, is the act of buying one currency while simultaneously selling another. Currencies are traded in pairs, with each pair representing the exchange rate between the two currencies. The first currency in the pair is the base currency, and the second is the quote currency. For example, in the Euro-USD pair, the euro is the base currency, and the US dollar is the quote currency. If you believe the euro will strengthen against the dollar, you would buy the Euro SSD pair. Conversely, if you expect the euro to weaken, you would sell the pair. The goal of forex trading is to profit from the fluctuations in exchange rates. Traders analyze various factors, including economic indicators, geopolitical events, and the market sentiment, to make informed decisions about when to enter or exit trades. The use of leverage in forex trading allows traders to control a larger position in size with a relatively small amount of capital. While leverage can apply profits, it also increases the risk of significant losses. Therefore, risk management is a crucial aspect of successful forex trading. In essence, forex trading is a dynamic and potentially rewarding endeavor that requires a blend of analytical skills, market awareness, and disciplined execution. It's a journey that opens doors to the global financial markets and offers opportunities for individuals to participate in the ever-evolving digital landscape. Now let's talk about how to start forex trading in 2024. Forex, short for foreign exchange, is a decentralized global market where currencies are traded. It is the largest and most liquid financial market globally. Currencies are traded in pairs, representing the exchange rate between two currencies. The first currency is the base, and the second is the quote currency. Understand the key players in forex market, including central banks, commercial banks, institutional investors, hedge funds, and retail traders. Recognizing their roles helps in gauging market dynamics. Seeking education, online courses and webinars. Enroll in reputable online courses and webinars offered by educational platforms and brokerage firms. Platforms like Investopedia and BabyPips provide structured learning materials. Books. Expand your knowledge with books such as Currency Trading for Dummies by Kathleen Brooks and the Brian Dolan or The Little Book of Currency Trading by Kathy Lane. Financial news. Stay updated on economic news through reliable sources like Bloomberg, Reuters, and financial news websites. Understand how economic events impact currency markets. Choosing a reliable broker. Select a broker regulated by respected authorities like the Financial Conduct Authority, the Securities and the Exchange Commission, or the Australian Securities and Investments Commission. Trading platforms. Evaluate trading platforms for user-friendliness, features, and relatability. MetaTrader 4 and MetaTrader 5 are popular choices. Account types. Consider your trading style, scalping, day trading, swing trading, and choose an account type that aligns with your preference. Risk management. Define risk tolerance. Establish a risk tolerance level to determine the amount of capital you are willing to risk on each trade. Generally, risking 1 to 2% of your trading capital per trade is a common practice. Use stop-loss orders. Implement stop-loss orders to limit potential losses. Place them strategically based on technical analysis or volatility levels. Diversify your portfolio. Avoid over-concentration in a single currency pair. Diversification helps spread risks and reduces exposure to a specific market. Developing a trading plan. Define goals. Set specific, measurable, achievable, relevant, and time-bounded goals. Goals could include profit targets, frequency of trades, or learning milestones. Strategies. Choose a trading strategy based on your risk tolerance and time commitment. Common strategies include trend following, range trading, and breakout strategies. Backtesting. Backtest your chosen strategy using historical data to assess its viability and performance under various market conditions. Practice with a demo account. Simulation trading. Open a demo account with your chosen broker to practice executing trades in a risk-free environment. Implement your strategy. Apply your trading plan on the demo account, refining your execution and adjusting parameters as needed. Analyze the results of your simulated trades, assess the effectiveness of your strategy, and make any necessary adjustments. Stay informed. Economic calendar. Regularly check an economic calendar to stay informed about upcoming economic events, interest rate decisions, and other factors influencing currency markets. Technical analysis. Develop skills in technical analysis, including chart patterns, indicators, and trend analysis to make informed trading decisions. Market sentiment. Monitor market sentiment through tools like the commitments of traders, report, and social media to gauge the collective outlook of traders. Starting small and scaling up. Initial investments. Begin with a modest amount of capital that you can't afford to lose. As you gain experience and confidence, consider scaling up gradually. Gradual growth. Increase your trading size in proportion to your growing skills and confidence. Avoid over-leveraging as it can magnify both gains and losses. Reassess and adjust. Regularly review your trading plan and performance. Adjust your plan based on your evolving understanding of the market and your personal trading style. Continuous learning. Stay updated. Keep up with market developments by following financial news, attending webinars, and participating in online forums. Networking. Connect with other traders, join online communities, and participate in discussions to share experiences and gain insights. Adaptability. The financial markets are dynamic. Be adaptable and willing to adjust your strategies as market conditions change. Controlling emotions. Patience. Cultivate patience in waiting for suitable trade setups and avoiding impulsive decisions. Emotional control. Manage emotions such as fear and greed. Emotional discipline is crucial for long-term success in trading. Learn from mistakes. Analyze both winning and losing trades to identify patterns and continuously learn from your experiences. Remember, forex trading is a continuously growing process, and success comes with dedication, discipline, and a commitment to ongoing improvement. Always approach trading with a clear plan, realistic expectations, and a focus on risk management. If needed, seek guidance from experienced traders or financial professionals. Now let's take a look to the future of forex trading. Technological advancements. The future of forex trading is likely to be heavily influenced by technological advancements. Automation, artificial intelligence, and machine learning are increasingly being integrated into trading algorithms, allowing for more sophisticated analysis and decision-making processes. Increased retail participation. The trend of increased retail participation in forex trading may continue. Accessibility to online trading platforms and educational resources has empowered individuals to enter the forex market. This trend could grow, driven by a desire for financial independence and the availability of user-friendly trading tools. Evolving regulatory landscape. Regulatory bodies worldwide are likely to continue adapting to the changing landscape of financial markets. Stricter regulations may be introduced to enhance transparency, protect traders, and mitigate systematic risks. Traders should stay informed about regulatory developments in their respective regions. Integration of cryptocurrencies. The intersection between traditional currencies and cryptocurrencies is a notable area of interest. The integration of digital currencies into the forex market may become more prominent. Central bank digital currencies and increased acceptance of cryptocurrencies could impact currency pairs and trading dynamics. Enhanced trading platforms. Trading platforms are likely to evolve with more features, better user interfaces, and improved connectivity. Mobile trading, social trading, and customizable analytics tools may become standard offerings, catering to the preferences of a diverse user base. Global economic shifts. Ongoing geopolitical events, economic shifts, and changes in the global trade of dynamics will continue to influence forex markets. Traders should stay vigilant about major economic indicators, central bank policies, and geopolitical developments that can impact currency values. Sustainable and ethical investment. The rise of sustainable and ethical investing may extend to forex trading. Traders and investors may increasingly consider environmental, social, and governance factors in their decision-making processes, influencing currency valuations. Increased data transparency. With advancements in technology, there may be an increased emphasis on data transparency. Real-time market data, improved analytics, and better access to information could empower traders to make more informed decisions. It's essential for traders to stay adaptable and continually educate themselves to navigate the evolving landscape of forex trading. Additionally, keeping abreast of technological developments, regulatory changes, and the global economic trends will be crucial for a well-rounded understanding of the future of forex trading. Now, as we conclude this journey into the heart of forex trading, remember that success in the dynamic world of currencies requires a blend of knowledge, discipline, and adaptability. Whether you are a newcomer or a seasoned trader, the quest for mastery is ongoing. Stay curious, stay informed, and stay connected. The financial markets are ever evolving, and your journey as a forex trader is a testament of your commitment to growth. If you found value in this guide, consider subscribing for more insightful content, and don't hesitate to share your thoughts in the comments below. Remember, the road to financial empowerment is a continuous one, and your dedication to learning is the compass that guides you. Wishing you informed trades, profitable endeavors, and a future filled with financial prosperity. Until next time, happy dabbing and stay connected.